All right, good afternoon, everyone. It is November 6th. It is Sunday. Welcome to the Stack Sunday prep session where I aim to prepare myself and everyone for the trading week ahead of us, right? So, starting off, I am just going to go over my trades that I took from Friday. I only took two. And something that I want most of you to begin focusing on is, or at least thinking about, is knowing when it is the best time for you to trade and when you should be sitting on hands, right? Remaining patient, okay? Now, I took puts right off of the open here, right? We were talking about this. Now, if price is pushing up into the open, typically this is a bearish kind of form of price action for me, right? It kind of leads into being a trap, and obviously you can see here that's what played out. Now, just like anything else in the market, especially speaking in terms of an edge, right? An edge does not mean that this trade will work out every single time. An edge just means you have an edge in probability, right? So a 60-40 chance is an edge, right? Now, you're not going to win every single time, just like it says 60-40, but that edge does give you potentially lower risk or, just the off chance that it does work out, right? So just like I was saying here, pushing up into the open typically leads to a retracement, right? A sell off or, just a pullback here. But it does not always, right? We've seen this plenty of times. Maybe this is, no, not this day. I'm trying to find a day here. I'm on the 1 minute, of course. Hold on. It was pulling up. Let me just go right here. Okay, right here. Okay, so I mean, there's a point here, right? Pushing up into the open, it sells off, right? But if I go back a few days, there was a day where it was pushing up into the open, and I traded puts right off of the open, trying to. Where did it go? I think it might have been this day. Maybe not. I don't know. But pushing up into the open, right? I don't think was this Friday. I don't know. I don't think I traded this day, but was pushing up into the open. Typically, I don't look at this as a positive thing, right? But I guess it did pull back a little bit and then continued the rest of the day. But just look for that. I mean, in any sense, this is just for risk to reward, right? So as it pushes up, we'll go back to the one here. As it pushes up, the risk for longs is much too high, right? I mean, I don't want to be someone else's exit liquidity who bought down here 261, 262. And, for a prime long entry, right, for calls or if you're just trading shares, you need to have something that is, cooled off or retraced to an area where one, it's a key zone or key level, maybe a key indicator, right? We've seen 200 EMA retracements or VWAP multiple times, but right at this point in time, it was pushing up. We had a fresh pre-market high. We had a supply zone here marked from a few days back, right? This after-hour high supply. Okay, it popped up, consolidated here for a moment, and then sold off hard, right? So I knew that there were sellers located here, right, in the supply zone. So we go all the way back. As soon as it pushed up off of the open, on the 1 minute, right? A lot of traders, I saw this on Twitter, right? A lot of traders, right, were buying long. They went calls or they took calls. Even some traders in the group took them. And, I was talking about this, leading into the open, guys. This is too risky. If it is truly going to continue to push further up, I would, one, like to see a 5-minute EMA retracement or a VWAP retest, right? Because it had pushed far away from VWAP. If they were going to sustain the buying, I likely would have seen it under or on VWAP, okay? So, pushing up into the open, we'll go over the call out here, right? A lot of traders were like, why did you take this? Remember, we have to be able to accept risk when it comes to our edge, right? Something that you've heard me say multiple times is, if my edge is presented and I'm looking for that trade, and that was the trade that, I have been mentally kind of fixated on or focusing on, right, then I must take it, right? Now, not to say that, hey, you've already made your money for the day, or if you are right on the day, this or that, right? It doesn't mean you should always take the trade. But if you are sitting there focusing like, hey, this is the open, I typically trade the open. If it's going to pop up and especially reject off of the supply zone, that to me says I can risk puts for the high of day, right? So prior to the open, I'm watching the 262 and 265 calls. 262 puts were just a little too far out of the money for me. I wanted to, capture a little bit more delta. You would have made more on a percentage gain, yes, but delta to me is what is more important in the market. So I'd said 262 or 263p risking the high of day. This was, let's see, why is it not pulling up the time? Oh, right here. Okay, 9:31 a.m. All right, so a minute off of the open. Now, I was talking about, this edge of, price pushing up or either selling off into the open typically leads to trapping a lot of retail traders, right? So I'd already been focused on puts as my long entry wouldn't have been down here, or wouldn't have been until down here near VWAP, right? A retracement. So, it popped up, rejected off of this. I don't really focus on 1 minute kind of candle patterns, but what I do focus on is the options contract, right? So we'll go back to this here. I don't think, oh, that's the wrong, okay, here. So what did I say, 263 puts? Yes. Okay, oh, let's see here. Whoops. What happened here? There we go. Okay. Right here. All right, now this is all I was watching and focusing on every single morning, but especially for this trade, right? So we have this low. This is, what was the expiry on Friday? The 4th, okay? All right, so this is all that I was focusing on Friday. Right here, okay? So every single morning, I will draw out and pull up my option contracts, right? Just like I showed you in the trading floor here, right? I said that I would be focusing on 262 puts or 265. If it does go too far out of the money, then I'll bump it up just like I did here, the 263 puts, okay? But I'll have like puts and calls. I'll watch both, and I'll watch them both obviously on the 1 minute, and I'll try to mark the open low. Okay, so this opened up. You'll hear me say it every morning. I'll say, hey, 263 puts, they opened up. The low is, 63 cents or 60 cents, right? You've heard me say that plenty of times. Do this. If you like trading the open, or just do this in general to have a key kind of support level throughout the rest of the day. Okay. But I drew this out here. This was the low. So I knew if I entered this trade, right around like low 70s, I think it was like 75 cents or so, or 80 cents, close to it. I said that I was risking the high of day, right? So 263 puts, risking the high of day at 931. On the underlying, the high of day, of course, we'll go back down here, right? I'm trading puts, high of day. This is going to be the low day in your options contract. So if I took this entry, right, 78 cents, my risk, yes, it's a cheaper contract, but from 78 cents down to 63, right, it's about 20%, right? But it's a cheaper contract. It's really only about, 10 cents, 15 cents. I said I was risking about 15 cents on this contract, okay? So a 15-cent risk, so $15 per contract risk granted me, right? And I'm not going to say the very peak, but we will say this general area where most traders got out, right? $200, $190, right? So I risked 15 cents or $15 off of the open per contract to make potentially $190 per contract, right? And we scale out along the way. We're not going to take a whole position here and dump it all up at the peak, right? Most traders would like to do that, but in terms of consistency, I didn't know that this was going to sell off all the way down to the previous day low area, right? Nobody knows where price is actually going to push. There are just levels along the way that we can take profit at, right? So for me, every single morning, if I can get something that is relatively low risk, right? 20 cents, maybe 30 cents or less per contract, I am aiming for at least, 1 to 3, but 15 cents into $1.90, right? That's like 1 to 13, 1 to 14 risk to reward, right? So, you know, being able to take this low risk setup, hey, if I had stopped out and lost 15 cents, that doesn't really bother me, right? But what would bother me is this, right? So I took the entry off of the open for the puts. Now, you guys see I only took 2 trades on Friday. All right, and look, these ended up going, right, 62%, 104%, and then 280%, right? These go deep in the money, okay? But did I take any other trades? Did I say, hey, I'm going to take a ladder here, I'm going to take this or that, right? It was Friday. I knew that I wanted to take profit, take money, and extract money from the market and go and enjoy my day, right? Go in and start the weekend early. Right now, sure, there was plenty of other opportunity for the remainder of the day, but remember, your job is to take money from the market, not to capture every single leg or every single price kind of reflection in the market. Okay, so I didn't take any other trades for, since 9:31. The second trade that I took was right at 9:53. Right, so we'll mark this candle, this one. All right, so I'll show this QQQ 264 calls risking the low of day, scaling in half, right? Scaling at 9:53 a.m. All right, so this sold off. Now, I've talked to you guys plenty of times in my Discord about charting not only price, but when for like an activity or just whenever you have free time, going through the chart and charting things out in terms of how retail traders are feeling or just emotions, right? So the only reason why I took puts here, yes, there were key levels, this or that, right? But it was my understanding of what typically happens in the market versus what retail traders expect, right? So when you are logging in and it's pre-market and you see this push up, right? A lot of traders are like, oh man, this is about to rip, right? Shorts are about to get squeezed. This is about to be fucking pound town for shorts, right? And we're about to make so much money on longs. You are setting a bias. The opposite happens, right? So same thing. You're trading, and let's say you haven't taken any trade here, right? And this is all you see, right? This is all you see. Oh, it's selling, it's selling, it's selling, right? Well, that's an easy decision, right? The market is selling off. I need to get myself into some puts. Okay, so that kind of a rise of FOMO, those emotions where traders don't really have any analysis based off of logic, where it's solely based off of emotions. Okay, so we'll go back to my entry. So I captured this trade here because of the understanding of how traders would react to this typically, right? Knowing that it could go against me. I could have taken a losing trade right off of the open. It happens, right? But that edge was there, right? The likelihood of it continuing up where buyers were going to sustain this push from non-farm payroll was not likely. It was not a high chance, right? So when it's selling off here, we're very far extended from VWAP, right? We technically have not rejected hard off of our 5-minute EMAs, right? And when it did sell off here, right, it made a lower low, but I saw that breakout buyers were punished, right? Hey, oh, it's about to dump, right? Retail traders are gonna fucking take 30% of their port and take puts down here, right? Into the previous day low demand at the 260 whole dollar site, right? And their X liquidity, right? I showed you this here from the trading floor. I'm up 280% here at 947, right? what am I going to do when I'm up 280%? Or even if I'm over, let's just say 200%, I'm going to take profit, right? So in order for me to take profit and sell, someone has to buy. All right, retail traders buy this. Now, I understand that they are FOMOing into the puts, right? Too far extended. Now, just like we talked about off of the open, this does not equate to a winning trade, right? I'm not going into this trade knowing like, hey, the market will reverse, right? I never go into any trade feeling that way, right? We have an edge where the likelihood of something occurring, an outcome occurring, is potentially in my favor, but I do accept the fact that this trade can be a loser, right? That is always evident in every single trade. So, but puts on a pop, calls on a drop, right? This is pushing down. We take calls, like I said from the call out, risking the low of day, 953. Okay, so we'll go through. I'll pull up that contract here. Call, let's say 264. Okay, what did I say? 953. This is the right day, right? Yeah. Okay, so you can see the low day is right here at 50 some cents, 55 cents, right? The high of this 953 candle, okay, is about 76 cents, right? So I got about the same trade, right, around low 70s here. So let me see. Let's just say the middle of this candle, 72 cents, okay? We'll just say the middle for example purposes, okay? 72 cents. Down to the base here, it's about 20% around the same, and it's 17 cents. So I did the same thing. I took the same trade, right? Is this not the same trade? We'll flip this chart upside down, right? This was like, let's imagine that this price action here was put like the pre-market price action, right? It's ripping, it's ripping, it's ripping. No 5-minute or no stronger retracements or anything like that, right? It's the same trade that I took from the open. Okay. Around 70 cents, risking around 15 cents, maybe 20 cents, right? And what does this trade grant you? Right? Let's just say that you get the first pop. That's already 100%. Second pop, right? Higher high. I'm going to scream at you guys to scale. 150%. Right? And then where they opened, right? You can see this very clearly. Where they opened, where were sellers stuck, right? Or buyers stuck. Excuse me. Right there. Clear supply, right? So you could have taken this from 72 cents, risking about 20 cents. So $20 per contract, and made upwards near of $170 per contract, or around the same 200+%, right? And it's all off of the basis of understanding risk to reward and being patient, right? Knowing when we should be entering our trades and when we should be sitting on hands, right? How many of you, let me zoom out here. How many of you went through this? All right, I was not trading at this point in time, okay, but I want to talk more about kind of FOMO a little bit here, okay? So we'll clear this out, clear set. Okay, we'll go to a 5-minute, kind of clean it up a little bit. Okay, so you had the high day supply rejection, traders were stuck there from the mornings kind of open, right? And this sells off. So obviously your best entry, right? Drops down, pulls back. Second best entry, right? First real pullback. Some would argue this one, right? This is a bounce off VWAP and a rejection, kind of a mid candle from the previous leg down, right? Right on it. Okay. Now, if you miss all of the selling above VWAP, right? And this is just dumping, right? Dumping super hard. What do traders do when it gets down near the low of day, right? They think that it's going to break down. It's going to continue, right? Buyers are going to stop out heavily. You know, all of these things, right? They're unrealistic. They do happen at times, but we cannot take anomalies for consistencies, okay? So all of the prime entries are here. This is why I want you guys to review your trades every single day, right? Going through, marking all your entries, exits, what you could have done better, what you should have refrained from doing, okay? But at this point, just like I said, these are the prime entries. If it's breaking the low of day, right, or the orb low, is that an entry for puts? Just like we saw these guys get punished earlier, right? No, it is not. There are buyers located down here, right? Now, the Qs weren't as clean as SPY. I saw SPY had a very flat kind of bottom, which was nice, okay? But if it breaks the orb low, that's not an entry. That is exit liquidity, right? This is where shorts will lock in majority of profit because a major target was hit, right? A pivot was broken. Whenever a pivot's broken, we should be locking in profit, okay? Now, if it was going to be a prime entry, I would have seen, EMA kind of confluence or a break in base on the orb low, signifying that these buyers at the low of day were stopping out, right? But that didn't happen. Now, look at this, right? Drops down, retail traders FOMO into this. They're too late to it. They're like, oh, I don't know what to do. I feel like this decision's being made for me because the low of day is broken. So I feel like puts would be the right idea, right? Obviously, this is a fake out breakout, right? Pushes back up, rejects off the EMAs. Remember, you want to short pops. Why? I mean, you could say, hey, I'm following along the trend here, which is fine on a 1 minute. But if you're taking puts at the low of day, this is not a pop, right? This is not a push up. Okay, you want shorts, especially market makers or larger participants in the market moving, mass amounts of money are not going to put their short where they know is potential exit liquidity for these much more prime entry shorts. Okay, now you have this new low a day. Okay, why are you not moving? All right, now this is something that a lot of traders struggle with, right? They don't see this pop up, as a prime entry for puts, okay? But they do see this kind of low of day retest or low of day break as the prime entry for puts, right? If you were just to do the opposite, you would find yourself in much more profitable trades, just like I showed you here, right? It's pushing up. You likely should be looking at the opposing side. Keyword likely. Now, this is not going to always work out, okay? Just like any other strategy or edge in the market. So this sells off. Did these sellers here at the low of day, retail or foolish chasers, whatever they may be, did they not learn their lesson, right? This push down to the low of day, fake out breakout, right? Pierces it slightly. These guys were like, oh man, it didn't break last time. This time it's totally going to break. They're met with a fat bullish engulfing bar. That's a huge red flag for shorts, right? It sells off again. It does create another lower low, right? But does it close below it? No, it's then met with another large bullish engulfing bar. The same, look, I'm going to draw a box on this candle here, right? Just on this bullish engulfing. Look at where they bought it up again. The same area, right? Squeezing shorts. All of these kind of FOMO shorts or, we're thinking that it's just going to fade the rest of the day. Unrealistic kind of thoughts on price like, oh, who's gonna hold long into the weekend or these are all dumb things. Trade the chart in front of you, not little sayings or what you think might happen from a retail trader perspective. Okay, so broke the low, fake out breakout. When are shorts, especially retail shorts, going to learn their lesson here, right? Hopefully this review session is going to help you guys this week. Understanding, you should not be taking puts or any short near the low of day, right? I am not a breakout trader. We have taken breakout trades at times. That's fine to take them at times, but it is not my edge. I posted this little diagram here on Twitter, right? Know your risk. Now, don't pay so much attention to the amount of percentage, right? I'm not ever risking, 40, 70, 90% risk, but a lot of times, it ends up being that way, especially for these kind of much more poor entries, right? So the only reason why a trader would have taken an entry here, right, is because of FOMO. They're looking for the continuation. Now, ultimately, their thesis is correct. It does continue to push, right? But you don't want to take longs on a push up. You always want a pullback. You always want to look for when potentially price on your premium will refresh, right? Or kind of cool off a little bit to allow you a much more lower risk entry, right? Right? Buying after a break of high is very riskful and rewardless, right? You're not going to see very many trades kind of play out in this sense, at least from a consistent manner, right? You get a lot of traders arguing, hey, breakout trades, it doesn't matter. Whatever works for you in the market works for you. But what I've seen, especially teaching, probably thousands of traders at this point in time, is that they all come to me being breakout traders and saying that they've lost, X amount of their portfolio percentage wise due to breakout trades, and they start to recoup a lot of their losses just by doing the complete opposite, right? Which is just buying pullbacks, right? So entry three, a lot of traders come to me taking entry three on a daily basis, right? Because they think this is the simple kind of obvious trade, when in fact this is a trap. Okay. So entry two, right? Another breakout. Now I can't say that this wasn't a bad trade, right? Because it did play out in their favor, but right, I've seen plenty of flags. I don't really like to call them bullish or bearish flags. This is just already on the diagram. But I don't enjoy taking flag breaks. I'd much rather get into a pullback within the flag, trading alongside larger money, because where are they going to scale, right? Well, if you get an entry down here for entry one, right, buying at a demand zone, or buying on a pullback trend line, you have this pivot risk, whatever it may be, right? You have somewhere to base risk off of. So one, you already have that kind of comfort set in, right? If the trade does go against you, you know exactly what to do. It's up to you to actually execute it though, right? But if the trade does break a pivot or break over this flag, that's where you lock in profit, right? Why? Well, these guys here are the downtrend break, the shorts, they're going to cover. This guy here, this stuck breakout buyer, hold on, right here, he's going to try to get out break even, right? So if I can have an entry here and scale out on a pivot break, high of day, pivot break, right? You're locking in profit as these breakout traders are just now entering into the trade, right? And what they'll do, if shorts do continue to cover here, right, they'll continue to pay you on the covering, right, which is sellers turning into buyers, and FOMO kind of breakout traders sustaining this move, right? Now, what happens again? It breaks the high a day. Retail traders, right? Breakout traders, short-lived win. You can make good money, but it ultimately ends up pulling back to the prime entry here, okay? Now, I get a lot of, I had this one guy kind of talk about this before. He was like, oh, well, majority of, I don't know, he probably pulled this statistic out of his ass, but let's just say it is, it is accurate. But he was like, majority of institutional traders who are profitable are breakout traders, this or that, right? Not any single one of you or anyone who I've ever talked to or traded with on Twitter is an institutional trader, right? No one in here or anywhere else that you've talked to has the capital to move the markets, right? They don't. Okay, so you are a participant in the market, yes, but imagine ourselves as just a drop in the bucket, right? Or little mice trying to kind of maneuver around, kind of elephants' footprints, right? Never think that your trade or your, 5 contracts or 10 contracts are going to help with a breakout, right? That is a fool's errand, and ultimately ends up, with traders blowing up accounts, okay? For the retail trader, I can say, factually and stand behind this day in and day out, your best trades will always be pullbacks. I mean, please, if you're a breakout trader and it's working out for you, that's great. But Sandy, it's fine. I'm likely already scaling out onto you, right? Locking in profit and chilling while price pushes up, right? Just like we saw here, right? Fake out, breakout over the high. Retail traders got stuck, right? They buy something at a very expensive price. It sells off. I'm making money as they're panicking. Okay. Why trade Qs instead of SPY? I get this question a lot, right? It's really just a much more tech focused index. There's nothing wrong with trading Qs over SPY or SPY over Q. Yeah, it's really just a preference. For me, I like watching the Qs every single day. This is what I've traded pretty much every single day, day in and day out, right? I mean, and I focus on just a few core holdings within the Qs. It is tech focused, like I said, so I watch Tesla, Amazon, Nvidia, and we'll look at AMD from time to time, right? But for me, I feel like it has a little more range. Now, not always, right? But they're really just identical in my eyes, right? It's pick your poison. Honestly, a lot you just see SPY being more popular across the board because it is the S&P 500 index. But it doesn't matter if you're trading Qs, SPY, if you're trading Tesla. None of that matters. The only thing that truly matters is how you're executing your trades and if you understand when you should be taking them and when you should be remaining patient, right? I guess some core benefits from trading these indexes is that you're going to get a sense of confluence basis across the board from all of the other holdings. Very high volume, very good liquidity. Just basic things across the board, right? In comparison to something like Pepsi, right? Here, hold on, sorry. Pepsi, right? Where like on an intraday day trading basis, where's the volume? Right, volume here very, very low. I mean, this is not even applicable, right? But 360, right? And then compared to the Qs, right? 33,000, 16,000, right? And then even SPY, right? SPY has more volume, I'm pretty sure. Yeah, 80, 70. But, it doesn't really make any sense for a retail trader to worry about, a difference in 10, 20,000 volume on the Qs or SPY. Let me answer some questions from the beginning. I think Eunice had a question. He said, on Friday, he took this trade on SPY. He saw a potential double bottom, and he had a stop loss at the line that it broke below. Let me put this up here. Stop loss at that line. One second. Let me pull this up so everyone can see it as well. Okay, stop loss at the line. It broke below after the initial pump and faded. He got stopped out. I took it again right at the breakout. His question is, he keeps falling for fake outs. What can he do to prevent this? He's also been struggling with overtrading a lot of his trades. Makes no sense when I'm reviewing them. Okay. So let me get this right. So I don't know if Eunice is still in here, right? So you're saying that you took calls here, right? Or basing risk off of calls for this kind of support line, and you got wicked out. Is that what you're saying right here? Okay, so you got wicked out, right? Now, this is something that a lot of traders are going to struggle with. Never set your stop loss on the key level, right? Let's see. Let's go to SPY here, right? So like this is exactly the same chart. Right, so like I don't know what your entry was, right? But even if your entry is a little further away from where you wanted to enter, right? Either size down so you can take on a little bit more risk, which would end up being the same amount of risk for a full position. But right, I mean it's painful in your review to see yourself get wicked out here for 6 cents, right? This is 370. I would never set a stop loss right on 370, right? I would give it a few cents, maybe 20 cents below the whole dollar cycle, maybe 25 cents or so, just giving myself that little sense of leniency or breathing room, right? Just because you see this quite often. Now, something like the Qs, okay, right, where this occurred, right? What is this? Let's just say this low. Okay, so this is like 259.44. See how this is 259.20, right? And then it goes all the way down to 259.08, right? It kind of is fading a little bit, testing those bids down here. This is much more difficult where something like SPY, right? You said yes, but you had a hard stop, right? Regardless, you will never see me taking a stop loss. Like when I say risking the high a day, right? Like I'm risking that high of day area. I'm not going to stop out as soon as it breaks the high of day. I'll give that little test because, over the high or under the low. Now, for newer traders, that is hard to kind of grasp, right? Because you could have, let's say, a hard stop like here, right? A little bit lower and still get tagged and then it run up. What you did, though, on the recovery was great. It's something that I've talked about plenty of times throughout the 84% rule, right? I guess your entry was here. You got stopped out, right on the support line. But then you said you retook it on the breakout, right? So there's nothing wrong with that. So I think your entry was like right in the middle of this line. You got stopped out here, so I'll just mark like a little X, right? And then you had like a little downtrend right here, which you took, right? So ultimately, if you took the breakout and this was your initial entry, you're still taking around the same entry, right? So the 84% rule, which, which is pretty much what you've done, but I don't know if you've, reviewed it or if most of you have reviewed it, right? Your initial entry, right? Not a bad entry. You just get wicked out. I've talked myself out of trades or been wicked out plenty of times before. It happens, right? We're only human. But if you can understand that your thesis was correct, that your execution was only poor at that point in time, and if you have the acceptance of risk or knowing that, hey, I could 84% rule this, taking the same stop loss, right? My thesis likely is going to work out. And that's exactly what you did there. So there's nothing wrong with what you did, right? I would just say tweak your stop loss a little bit. Maybe position yourself to a point where, if you really look at it from this perspective, right? I don't know what your entry was. It's hard to say here because this is a 5-minute candle. 1 second. This is a 5-minute candle, so I don't know if you hit it right out the base or if you hit it a little bit higher up. But let's say that you had, you market bought or you got your entry in a little bit higher, right? Well, where you stopped out was the prime entry. Regardless of where we take our entry on the chart, we must always ask ourselves where the core participant in the market has their orders or what they're trying to defend, right? And even though you have this entry up here, that does not take away from this main buyer support at the low day around 370 whole dollar psych, right? No, for sure. And hard stops are great, right? But I feel like you can learn a lot from them, right? You can learn whether or not your stop loss is too tight, which in this instance it was, or you can learn whether or not you need to tighten up your stop loss, right? If you have too loose of a stop and you're giving away too much of your position each trade, right? Okay, someone said, how do you scale out of your position from a percentage standpoint? Okay, so Mega Man NFT, we'll go over the Qs again here. We can just go over this trade, right? This was the calls from the low. Okay, so low a day here, this is the risk area. Remember, I don't give this completely. All right, I'll give it a little bit of room below. But for me, guys, it's always about pivots, right? I mean, you can ask Denali, you can ask, Noonan, you can, ask pretty much anyone in the group, what are one of their biggest strengths in the market, and it's understanding pivots, right? So this was a drop down, push up. It sold off. Well, regardless of percentage, I never if I sat there, like a lot of our trades do go 50 to 100%, right? But from a consistent standpoint, I can't sit there and say, hey, I'm only going to take profit at 50%. I'm only going to take profit at 100%. right? It does work for some traders, but what has worked for me over, the course of my trading career has been locking in profit as it breaks a pivot, right? So let's say, hey, this was the entry, it breaks the pivot. I'm going to tell you guys a scale here, right? That's 50%. So regardless of a percentage, if you're trading, Monday's expiry, you're trading Wednesday's expiry further out, right? I never worry about the percentage because it's all about delta, right? Percentage is great, right? For multipliers, right? It is fun, but at the end of the day, we're here to extract money from the market, right? Not percentages, right? You see a lot of guys like, oh man, I hit this 10-cent contract and it went 1,000%, okay? Right? You made $90, right? And you held to 1,000%. And a lot of guys, it depends. Some of the bigger guys, they're not going to take one contract, but, most retail traders flaunting percentage gains, they're taking one or two contracts, okay? Now, for me, in terms of delta, what I'm getting paid per contract is more important than the percentage, right? And how I can collect or extract money from the market is just pivot breaks, right? So pivot, it's broken, pulls back. Well, I already locked in profit here, right? Why? Because a stuck seller, all of this selling here, they're stuck. Well, if it breaks over their pivot and they have the chance to cover break even or close to it, they will. That pivot break, base, continues. Where's my next target I'm going to scale? Hey, it rejected off of here, right? Pivot was broken. You're going to hear me scream scale, right? It pops up, pulls back to what? Now you have a 1-minute EMA confluence with your pivot being broken, right? You can, move your stop loss up here, right, where you've taken profit, or ride the EMA, whichever one, right? Pivot breaks here again, right? Or I'm going to tell you to scale, right? This is also, if you are hyper focused on percentage gains, it's the same thing as hyper focused on dollar amount, right? So like if you're sitting there like, oh man, like, I'm about to hit a goal. I need X amount of more dollars. I need, 20 more bucks per contract, this or that, right? Instead of trading the market like a robot, right? If something happens, right, I must do this. If this happens, I must do that, right? So if a pivot breaks, I must scale out, right? Another pivot break. Hey, pivot breaks here, scale out, right? So focus on that a little bit more than percentage gains. It will help you. And if it does, let's just say like it breaks the first pivot, right? And you don't lock in profit, at least move your stop loss up, right? Then you will walk away surely with a green trade. If your entry's down here, may not be a huge green trade, but you try to sustain. Now, if this does hold your pivot for the stop loss, right? And this was your entry, you just keep moving pivot up, right? You're at least going to lock in 30% here. Pops up, pulls back, new stop loss, move the risk up. You're at least going to lock in 123% there. And same thing here, right? Pivot around this area, that's 180%. Let's say you get stopped out here, you made 175% from that call out, right? Just by moving the stop losses up and potentially scaling out on the pivot breaks. What time frame can you recommend to trade on for beginner? Do not trade on the 1, right? Delete the 1 minute from your trading if you're new. I would say majority of you would benefit from removing the 1 minute entirely. You can maybe watch it for the entry based off of a 5-minute thesis, but day in, day out, your best intraday time frames typically are your 5-minute and your 10-minute, right? Now look at these trades. Okay? 5-minute EMAs, right? They don't give too much kind of data here, but they have confluence with VWAP. Breaks up, pulls back. Do you see anything closing below VWAP in your 5-minute 9 and 20 EMAs? No, you don't. Okay? Pops up, pulls back. They try to hold the 5-minute 9 and 20. Ultimately, this is a stop loss for a lot of longs. They stop. As it breaks below, yes, it bounces on VWAP, but look at that EMA cross retracement. Rejects. Right? So you had 1 trade, 2 trade, drops down, pulls back, another 5-minute 9 and 20 EMA, right? Dumps. All right? So these are all potential trades, right? Pops up, pulls back, Pretty good entry here, right? Entry here and here, right? Right on the 5-9. Now, this is a little bit more subjective, right? You probably have to go in a 3-minute or so, but 5-minute setups were great. But, look at that. How many trades were presented to you on Friday solely looking at this 5-minute, right? Just the EMAs. Just the EMAs. Not talking about buyer's bid, seller's ask. Not talking about tweezer tops or tweezer bottoms. Just the EMAs, right? Prime entries. Not some like 1-minute little floozies, right? But prime entries. Okay, now also on the 5-minute, what other entries did you have? You had a reversal doji candle here, right? You had a tweezer top. You had an inverted hammer here, right? You had another indecisive potential reversal doji, right? Hammer candles down here, right? Plenty of opportunities on these kind of large, this is not even a larger time frame, but your 5-minute is one of the most watched time frames for your intraday, especially for day trading. Okay. Do you trade any differently with 0 DTE versus 1 to 2 days? No, not necessarily. I still take options contracts trades. I still take trades based off your 5 and 10-minute charts, stuff like that. I would say that with 0 days, I know that I've talked about refraining from focusing on percentage gains from a newer trader perspective. As you gain more experience and you're much more comfortable with your own edge, you will be able to take advantage of this, right? So like, we had, both of those trades hit 200%, right? So you tripled your money pretty much on Friday for both of those trades if you took them when I did. And, that is the benefit of 0 days, right? You're trading cheaper contracts, looking for percentage multiplier gains, stuff like that. But don't get too enthralled or too enticed with that, right? The main focus should be the extracting of money. And trading 0 days, that's your hardest potential options trade, right? You don't have as much leniency in terms of theta. The contracts are not going to hold up as much, right? 0 days around 12 to 1 really start to decay rather rapidly. You see it on SPX every single day, right? So I would say majority of new traders should not be trading 0 days. They should be trading your 5 or 10-minute, of course, and trading the next expiry out on a weekly, or just trading something like AMD or Apple, where the expiry is always going to be on Friday, right? Let's see. Shiny said he put this in chart review this morning, but pasting the link here. Okay, I'll check it out. Okay, so his question is, he said, how do you decide when to take an entry with zone interactions? Okay, so we'll go back to my orb levels here. Oh no, are they gone? Oh no, not orb. Directional analysis. Okay, so right here, right? Now, depending if you're trading 0 day, whatever, right? We had these zones, okay? So the previous day high supply, this was like way down here, right? So it obviously wasn't respected, but you did have this overhead supply zone. Remember, zones are like dominoes, right? If we can take out this zone, then this zone is up for bat. And depending upon how much momentum there is, maybe you can knock it over. But if not, it's just going to stand still, right? It's just going to stand up. So it pushed up. Now, this is all on the basis of acceptance of risk, right? If it was, I take puts in a supply zone, that's textbook, right? Basing risk off the high, right? When it's pushing up here, you had confluence with not only the supply zone, but the pre-market high and nothing closing over the pre-market high with strength, right? You also had the orb high here. So for me, Shiny, I'm never just taking something solely off of, hey, it's in a zone, right? It's just like any other trade. I need at least 2 confluences. You had, like, let's say you took puts here, or someone took puts. I was done trading at this point in time. But you had the orb high, not broken. If it is truly going to break out and continue in a bullish manner, it will break the orb high, retrace to it, right? That retracement is key, and then continue forward, right? But it did not do that. It just rejected off of it. You also saw nothing on the 5-minute chart closing over your pre-market high. So you had supply zone rejection, orb high rejection, and pre-market high rejection, right? Those confluences gave you 5, 10, 15, 20, 25, 30 minutes to come up with a thesis, right? Now, why would traders take calls here at the high of day when there's nothing closing over this tweezer top or the pre-market high, right? Just like I showed you. Why would traders do that? They gave you 30 minutes where it's stalled out here. They gave you a very clear inverted hammer candle, right? You guys can ask Sooner about that. He takes a lot of trades just based off of that 5 or 10 minute, inverted or just regular hammer candle, right? Why would a trader sit here and go long, especially with overhead supply, right? It's all about confluence. Now, same thing here, right? Pushes down. I have this kind of like pre-market support level. Yes, this is technically the pre-market low, but you can see where this was holding up. Support, 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 bounces there again. This is just off of the non-farm payroll, right? But you had that support, you had this doji candle, you had the demand here, right? And it was very far extended. I would not be comfortable taking a short down here, especially off that candle. So in terms of zones for confluences, right? Look at this. This previous day low zone wasn't really respected too well. You can't sit there and say, hey, I marked these zones out in the pre-market or the previous day, and these will be respected, right? There's only the likelihood of them being respected, and if they weren't, right, of course, I always try to flip between my directional analysis chart and a cleared out chart, right? You had this low here, kind of a tweezer bottom. Yes, it does break below it a few times, but ultimately doesn't close with strength below it, right? So this is a demand interaction, right? We have a pivot high supply. What happens here? It's broken, pulls back, does not close out of the supply once again, meaning shorts can't reject off of it and pushing it further, right? We should also understand, how strongly price reacts to zones, right? This barely touched the supply zone. That shows me later in the day, potentially this is a very strong supply zone with shorts inhabited, right? And looking to reject this zone with strength, which they did later in the day. Same thing here, right? It barely touches this zone, but just like any other system or edge in the market, it's not going to you can't say, hey, well, it barely touched the zone. When it touches it again, I have to hit it. You have to trade the chart in front of you and break down price as it is being developed, right? So if it did touch this zone, right, hey, that might have looked good, but the following 5-minute candle closed into the lower wick. That shows an immense amount of weakness, right? So hopefully that helps your question out. But the core basis of it, right? TLDR, you got to have multiple confluences in order to have a stronger thesis for that zone. Let's see. But yeah, I mean, I feel like that's pretty much all I wanted to cover. Tomorrow I will be live 8:30 in the morning Eastern time, of course. I also will be on Spaces with Wolf. I guess I'm doing a live trading with him and a few other people. I don't know who else is going to hop on, but I'll be on Twitter Spaces as well. I think he's starting that probably 10 or 15 minutes prior to the open. So I hope to see you all there. Should be a good week this week. I think, do we have CPI this week? I think I heard or saw Van talking about it. I don't know if we do or not. Let me see. Oh, okay, 11:10. Yeah, so what is that? Wednesday? Thursday. Okay. Sweet. Okay, so yeah, CPI on Thursday. So you probably see some, just like, I kind of treat CPI like FOMC, right? Like lower volume. I think we will see a few trends prior to that, but just be careful, especially trading CPI. If you are going to swing something, you probably swing something that might, ramp up in IV. I don't know. I would just be cautious. I'm 95% cash every single day at the close, so there's not really a big deal. But I will catch you guys all tomorrow morning, 8:30 a.m. Eastern time. We'll do the pre-market prep. We'll trade live until about 11 or 12, and we'll wrap up another solid week. Very nice poll from Friday also. What was the poll? 109 to 32. Very, very nice. So that's about 75% green, I think. But until tomorrow morning, guys, thanks for your time this afternoon. Hopefully you guys enjoy the rest of your Sunday. And you guys take care. Thanks.